Right. Welcome, everyone. So glad to have you joining us tonight for a webinar about basics on bookkeeping, forecasting, and negotiating, aimed mainly at entrepreneurs that are starting or thinking about starting or jump-starting their businesses. So that's the purpose for our program tonight. My name is Steve Carver. I'm speaking with you from my home office and studio, I guess you'll call it, in Dunn, North Carolina. I'm so glad to have you on board and joining me on my journey of entrepreneurship. This is my presentation number 1096, and I appreciate you letting me join you on your journey into entrepreneurship. I feel honored and privileged to do it. Let me say right up front, I'm not a lawyer or a tax accountant. I'm a fellow that's been in business for 64 years, learned a lot of lessons that I try to share with folks in these webinars, and to offer you free advice. And always the first piece of free advice is get a second or third opinion before you make a decision related to your financial security or that of your family. And if you're on new ground, especially in business, find someone that's been there and done that and talk to them. There's plenty of good qualified counseling available to you at the small business centers. And there's certainly good folks to get it, and I would highly recommend it. It's free, and there's no charge for it. Tonight, we're being facilitated by the Small Business Center at Nash Community College over in Rocky Mount, North Carolina, where Ruthie Holloman is the director, and a fine director she is. Does a great job for her clients, and she'll do a great job for you if you'll give her a chance. There's no charge for the service, and it's all confidential, so I suggest that you give the phone number here, 252-451-8344, a call. Make an appointment with Ruthie. Talk to her about the business plans that you're in and see what assistance she might be able to offer to you. Excuse me, I've got that COVID cough now for several weeks, and so I apologize in advance for coughing during the presentation. I'll try to limit it as best I can, but it's kind of uncontrollable sometimes. Ruth's office is over at the campus for Nash Community College in the William S. Carver building up on the second floor. Her room number is 8259. So if you go over and set up an appointment, she's got a real nice facility there and place to help you. This is the number 5 of 6 presentations in a course that we've been working on, and a lot of you have been really attending every session, and I certainly do appreciate it. We've had lots of good attendance through the thing, and we're working it down. Tonight is number 5, and tomorrow night we'll wrap it up with number 6. So tonight we're going to be talking about bookkeeping, forecasting, and negotiating, and tomorrow night we'll do kind of an overview of what we've talked about before and focus on basic taxes, record keeping, depreciation, and I'll share with you some secrets to help you close sales in the future. Tomorrow night's presentation is required if you want to get a certificate of completion or graduation, so please plan to attend tomorrow night. Now, so our full schedule is tomorrow night we'll be talking about taxes. On Wednesday night, we'll be talking about red flags and pivotal points for startup businesses. And this is number 5 and 6 of a 7-part series that we've also got going on. So if you can wrap up 2 series this week and earn some certificates and awards. On Monday night next week, we'll wrap up the whole season when we talk about how to turn a hobby into a business. Now, let me caution you on Thursday. I didn't mention it on Thursday at 2 p.m. This is a mid-afternoon presentation about how to price your products and services. Lots of new business folks just don't have a clue on how to approach pricing, and we've got a real good comprehensive 2-hour presentation to give you lots of information on that. And then on next Monday at 5 p.m., 5 to 7, give you some basic ideas on how to turn a hobby into a business, different points that you might want to be aware of. A lot of folks are planning on doing that. So especially making New Year's resolutions in the near future. So that might be something that you'd really like to attend. The study guides that were sent to you tonight, or that will be sent to you tomorrow, if you didn't get them already, and if you'll give me your email address, are the basic talking points that we'll use tonight. Some good tips on negotiating, our Street Smart Skills, 40 Street Smart Skills videos, nonverbal communications, negotiating with body language. And for those that are hoping to complete the course and get a certificate, the quiz, the winter quiz for this series will be emailed to you. And then a sheet on the requirements to earn the different certificates that are available. Tomorrow, or maybe even late tonight, you will get a email that's a survey form from the Small Business Center group in Raleigh, asking you to evaluate this presentation. I certainly hope that you'll answer that and send it on back in. They will appreciate it as well. So your homework assignments are basically, if you've stayed with us through the whole series, you're aware of that several different things that you need to do to earn your certificates. Most of the folks that are attending on a regular basis have completed most of them, with the exception of not getting many YouTube videos, and that's a requirement for graduation. So let me encourage you to get that video on in if you haven't done it yet. I've been keeping up with the attendance, and we've got 4 folks that have already attended 4 perfect attendance. Latoya, Tim, Sherwanky, and Danielle have attended all 4 presentations up to tonight, and hopefully they'll be on board with us tonight as well. And Kat, I see you've got 3 on board, if my records are correct. So you're attending tonight and tomorrow night to qualify you, as well as Darcy if she comes on board as well. If I missed the night that you attended and haven't given you credit for it, just let me know. So this is like November 30, November 09, November 07. If you have some other nights that I missed, just let me know. And then we've got lots of other people that have been attending and got those dates down, so look forward to you joining us as much and as often as you can. Speaking about the folks that have been active with us this week, Latoya has been very active. She's posting lots of stuff on Facebook, so thank you for your work there, Latoya. Her new company she's getting started, Self-Care, Self-Aware, and Healing. New startup entrepreneur business. I'm proud of you. Sherwanky Mitchell in Roanoke Rapids has been working really hard and really steady on doing lots of work to promote her crafts business and creations, where she makes products for people, special custom products, doing a really great job. She's been taking some good videos and sending them to us, where you send her pictures, she'll make custom pillows, cups, and pretty much anything else you can think of for you. And she'll look forward to hearing from you. She's got her own YouTube channel started, and looking forward now to getting some videos posted there. That's a very important thing that you can do to help getting started. Here's a copy of our YouTube channel page, and so looking forward to watching that business grow. If you're active in business and you stay in touch with us here at the Academy of Entrepreneurs and Associates, we will do everything we can to help you promote and get your business up and started and give you all the ideas that we can. Here's some of Sherwanka's creations that she's doing, business cards and other items. Katina is with us tonight at Rocky Mountain, her DIN creations, created from the heart. Thank you so much for your hard work. We appreciate all that you're doing, and I just know it's going to lead to a good place. I loved your mission, vision, and promise statements. Very well done, and appreciate you sharing those with us as well. You've listed your profit centers, so now you can put some values on those and begin to start your business plan. Regina's been with us on a regular basis. However, she let me know that her dad is ill, and she's going to take a break off from attending the Academy series until he gets a lot better. So our prayers are with her and her family. Excuse me. So here we go. Our florist over in Raleigh is doing such a great job, and we're so proud of her. She's just been sharing lots and lots of information with us, and I'm sure that her business is going to go big guns when she gets started. We're not promoting it public yet because she's not quite ready to go public, but she's sharing lots and lots of information with us, and I know she's going to have a really good business when she gets started. Her name is Dorothy. So thank you, Dorothy, for all your hard work. So again, get with it, get with the plan. We'll have a brand new series starting up in mid-January if you'd like to become a member or the associate of the Academy. And we'd just love to have you come on board and start a series with us so you can become an associate member too. We've got several new folks with us tonight, and I appreciate you joining us. My job is to be assertive and to try to motivate entrepreneurs to take that next step on their journey that they're wanting to go to get their own business started. And I'll be as assertive as I possibly can, and hopefully not to the point that I'm being pushy, because I'll always say that you need to keep moving at your own pace. Maybe I'm trying to move you faster than you want to go, and that's okay. You just say, I've got my pace, I feel comfortable with it. But if you need a little help, to shove to get to that next step, then old Steve-O's going to try to help motivate you to go on. We have to, as entrepreneurs, be assertive from time to time because lots of people need motivation. Our customers need motivation to come on, let's close a deal. Our customers need motivation to let's talk, let's continue to negotiate. Our employees will need motivation to stay within the banks that you need to make your business successful. Excuse me. And we ourselves need motivation, of course, from time to time because it's real easy to kind of get in a funk, get in a web where you just can't move as fast or get as much done as you want to. And that happens to a lot of us for a lot of different reasons. So we have to be able to find that endurance to motivate ourselves and keep moving on. So that's one thing that attending these webinars hopefully will help you do. Lots of people say it helps them. So my job is to motivate. Your job, I want to share with you, is to find the endurance to stay in the game. Entrepreneurship is all about staying in the game. If you stay in it long enough, you'll learn to find tips to help you be more profitable and make more money and have less stress. Part of your staying power when you get your business started is to realize that people buy two different types of things. They buy things they want, and then they buy things they need. When people are buying things they want, it's lots of times it's kind of on an impulse or it feels good right now, I think I'll go ahead and buy it. And they don't give it much consideration or time, and therefore you're able usually to make a little bit more profit, maybe a lot more profit sometimes, because they're not shopping that hard. They're shopping for that inspiring moment that says, let's motivate, let's buy this thing now. So you want to have items in your profit centers, things you're selling and offering, of things that people want. But the reality of it is people are going to buy the things they really need first. They're going to buy those things first, like food and clothes and parts for their different automobiles or equipment. And if they need that, they will shop hard for it to try to stretch their dollars as far as they can. But the key is they're going to be buying that continuously. All the time, they're going to be buying things they need. So we as entrepreneurs really need to figure out how to have a combination, a diversification of things that people want and things that people need. And when we do that, we'll have folks that come shopping with us for the things they need, and then we'll be able to tell them and show them the things they may want. Kind of like going to the grocery store. If you go to the grocery store after bread and milk and cheese and juice, and we all do that on a regular basis, right? And bacon, then the grocery stores are going to have us walk all the way to the very back corner of the store to find those things that we need. Why do they do that? Because while we're walking through that store, we're going to pick up and see things that we want on the way to buy the things we need. And lots of times, if you're like me, you'll walk out, you went in for one item, and you'll always come out with 5 or 6 items. One thing you needed, and come out with some other things you wanted. They're smart about that, and all other stores that have been in business a long time are smart about that too. We need to be the same way. We need to have our items, the things that people need, so we can show them the items of things that they want. That way our business can be more sustainable as well. We now have to get out of the stands. It's a big time football and basketball season now. And an entrepreneur that's going to be successful and move forward it can't just be a spectator. It's smart to watch and to listen and to learn, but we need to be players. And the way that you get to be players is very important to tonight's lesson, is learning how to negotiate and learning how to forecast so that can put you in the game. So my goal is to motivate you entrepreneurs to go ahead and move forward, put yourself in a position with the tool belt and the equipment that you need to get in the game as a successful entrepreneur. Now, I have already sent to you, or will, the 40 drill skills that will help you really build your skills as an entrepreneur. And when you get that, I want you to watch those videos, take it in, learn all that you can so that you can really be set up, ready to get in the game. Now, we've been in the series, we have gone through up to now 32 drill skills, and tonight we'll wrap up the last 8 to talk about these to help you understand. But in your handout, there's a video associated with 30 of these 40 skills that I'd really like for you to look at and read, and rewrite in your own words if you'd like as to how you would use them if you want to earn go the extra mile award. Number 33, when you're approaching a person to say hello to them or to introduce yourself, that is an important moment in a relationship. Or if you see someone that you know and you go see them to say hello or at least acknowledge their presence, that's a very important moment in a relationship. When a customer or a potential customer is coming to you to say hello, to ask you a question, to visit your store or you for the very first time, I want you to know that this is the greatest opportunity you will have, to let them know that they are really important to you. And the way that you do that is to stand up and smile and extend a greeting hand to them with energy and enthusiasm that you are so glad to have this opportunity. Not just sit in the chair and look up and maybe greet them with a nod or what can I do for you, even if it's said nice. But stand up, leap, get up in a hurry and extend a hand and be excited about meeting this new person or this regular customer every time you can. That will make a world of difference in your relationship, the way they feel about you, because you're showing them that they are important to you. And my friend, if you don't have time to show people that they're important to you, you're going to be missing a lot of business opportunities in the future. So leap to acknowledge and welcome a customer. Keep your radar turned on all the time. Always be looking for what is the next hot thing that you might be able to sell to your customers. Things are changing all the time. Technology is changing. People's needs are changing. Seasons are changing. And being on the cutting edge, being on the front end of an item when the season comes in or when this new product is being generated is a huge, important issue for your product lines, for your profit centers to be up to date and staying in touch. Now, we got to be careful for short-term fads, I know that, but depending on the nature of your business and what you're doing, you want to have the hot things for your regular customers. You want to be the place people come to buy what's in style, to buy what they need next. Remember, I used the word need. because hot things come as things people need as well as things people want. But it's up to you. It's not up to anyone else but you to keep your radar turned on and be aware of what the next hot things your customers want are. Where can you start learning that is talking to your customers, doing surveys with them. When you have a chance to talk with potential customers, what's the next hot thing they see in the marketplace? What's the next thing they're probably going to buy? Get in the habit of asking those questions so that you'll be better informed. To be informed is to have a structured forecasting plan. We'll talk tonight about forecasting, but let me tell you, it is so important that it is your nature and in your DNA to always look out for those curveballs that are coming at you. Old Murphy, that fellow who sends bad luck, he sends curveballs out every day. And there's pitfalls that we need to avoid. We don't want any more unpleasant surprises than we have to have, because they always end up being unexpected expenses as well. And just in the nature of doing things every day in business, there's plenty of that that's going to come your way. But if you are a structured forecaster, you'll be ready. You'll have risk management plans in place to help these things not sink your ship. So keep that in mind to be ready for it. Now, negotiating, doing business with other people, the key that we'll focus on tonight and always in the future, you will be able to be a more successful negotiator, deal maker, deal closer if you give it the time to have extreme preparation. Now, I know that sounds like homework. It doesn't sound like much fun, but let me tell you what is fun. Is to have a year of business that you can look back on and say, on every important negotiated deal, I held my own and I got most of them. And if you're able to say that, that means that you really worked hard at extreme preparation. Closing deals and getting the best deals, the most profitable deals, is all about you being ready when you enter that negotiation. And I'll get on that tonight real hard. So take this in mind and be ready to study and learn forecasting and negotiating skills to help you be a better small business person. There's the fact in this world that people really don't care about how much you know until they know how much you care. Smart fellow said that once. I teach it in my webinars, and people hear this all the time. Maybe, I don't know if you've heard it before or not, but in my circles, I hear it often in speeches and in sermons and such as that. People don't care how much you know. They're not interested in know-it-alls, people who talk over you and always have a better and bigger deal. That may make you feel good, but it doesn't make people you're talking to feel good. But they will listen to you and will consider what you're saying or offering if they know that you really care. Care about them, their well-being, and their future. So we have to earn that trust as we talk to people. Show them how much you care. Now, why should employees, why should your potential employees really care about your hopes and dreams for your business if you don't really care about their hopes and dreams for their future? Good question, isn't it? Probably they won't care at all unless they know you care about them. And then when an employee understands what your goals are, how he can or she can contribute to help you get there, and that you're going to approach this as kind of a family, an employer family of employees trying to get a common goal, then they will start caring and become engaged in the business. Now, we can change the words right here. Why should a customer really care about your dreams and your goals for your business if you don't give a hoot about their dreams and goals for what they're trying to achieve? They don't. It's just business, they'll say. But Steve-O here is trying to encourage us at the Academy to not look at this as just business, but to look at this as long-term relationships with the endurance to last for a long, long time, because it is us as business people, us as entrepreneurs, caring enough about our customers that they understand that. And when they do, they will care about your business being successful as well. This is a good time to talk about this as the election season is coming about, and in about 60 days, the primaries will be starting, and we'll be hearing so much about politics we get sick of it. But right now, it's a good time to settle down on some basics. I want you to know that integrity cannot be compromised or replaced. Charisma is a good thing, but it is no substitute for character. And integrity comes through character. So know that the customers feel the same way about dealing with you as an entrepreneur. They want to see integrity with you. They want to know that you've got character. And it's fine if you've got the charisma to really demonstrate that. But we don't need to try to be so charismatic to try to fool people into something that we are not. And I want to say to you, as entrepreneurs, you need to keep your guard up, to be aware of there are people out here that have a lot of charisma and zero character. There are a lot of people out here in this world that have a lot of charisma, but zero integrity. And we have to beware for those. And therefore, what seems to be sometimes is not as it seems. So keep your guard up. Remember the golden rule. Remember the importance of telling the truth and not lying. And you show that. You make that a part of the way you do business and talk with people. Talk with your creditors, talk with folks, your bankers, talk with your customers. Have the charisma, but make sure you're demonstrating your integrity and your character to earn the trust of your potential customers. And lastly, and you may have experienced this in your life and business, employees don't quit their job usually. Usually, if an employee has a job that they're at and making a livable wage or a chance to advance in the future, they're not going to quit. But let me tell you this, they will quit their boss in a heartbeat. Employees don't quit their jobs often, but they will quit their boss. I've seen this happen so many times through the years. I've had over 2,000, 2,500 employees in my business time. Usually only 20 to 60 at one time, but over the years it adds up. And I've seen lots of times a really great employee, for whatever reason, would move on, and then I found out later that they quit their boss. They quit the manager that I had hired to look after them. So you have to be aware of this when you're talking and doing business with folks. Maybe in the position you're into now, make sure that you are the right kind of manager, the right kind of leader, and just not trying to be the boss. And as you do that, you're going to be able to hold on to the better employees a much longer time, and they will become interested in helping you reach your goal as well. So just some tips of street smart drill skills to help you get in the game and stay in the game and be a whole lot more successful at it. So now that those that are moving forward and getting their businesses up and running, I want you to start posting your ads at Facebook and business. Do your videos, your introduction videos, or write your testimonials and your vision statements. Start coming up with your photos and vehicle wraps of what you're doing. Let's make some YouTube training videos and get your business cards made. All these are important things as you're starting your business up. Make Facebook one of your web pages. Get those statements out there. Encourage folks to take advantage of these lessons and other folks that you know that might help you in business. Encourage them to start coming to these webinars as well. So the Academy quiz will be going out to you. Make sure that you write on there when you return the quiz your name as the way you want it to show on the certificate, and then make sure you give me your mailing address, because we'll be mailing it direct to you through U.S. mail. So tonight again, we're going to start moving in on our subject matter, bookkeeping, forecasting, negotiating. Your study guides, I have go into depth into a lot of this stuff with the 21 tactics employees for negotiating, different types of body language and nonverbal communications. Our presentation tonight just kind of hits the top of these items to hopefully get you interested, but the study guides are very good reading and will be very important for you to keep and to watch. So let's talk about bookkeeping to begin with. Bookkeeping is important to business people so you can gauge how things are going on a daily or month-by-month basis or quarter-by-quarter. We can't just wait till the end of the year to figure out how we did. And if we did great, that's wonderful. But if things went wrong, maybe it's too late to do something about it. But if we're on top of our business daily and weekly and monthly, we can make the adjustments we need to make to get there. That's why bookkeeping is important to the owners and the managers of your business. Lots of us in business, especially new folks, say that, well, all I need to know about bookkeeping is each month how much sales tax or payroll tax I need to take out and need to send to the government to stay out of trouble. And let me tell you, there's a huge percentage of business owners that when they consider bookkeeping, that's it. That's where it ends. But I want to tell you, that's a bad way to be thinking about it, especially as a new entrepreneur, because there's so much good information to be learned from bookkeeping. Now, in the accounting world, you have your bookkeeper and you have your accountants. You've got two different titles here that are doing this work that goes hand in glove. But the accountant or the CPA, but the accountant doesn't have to be a CPA, a certified public accountant. You can definitely have lots of accountants that are not. But the accountant's job is to look over the bookkeeper's work. They will look at all the monthly totals in the annual financial statement to help with federal tax returns and reports, things that are related to the stockholders and the officers. So the accountant, the CPA, is looking at the long term, the annual reports, where the bookkeeper is looking at the daily work, the daily work. The bookkeeping is a process of writing down all the transactions that's going on back and forth every day and keeping up with them in a consistent way that you, the owner of the business, can do comparisons and figure out if you're making or losing money and what's to invest and what's not doing good. That's what the bookkeeper is there to do, not just to give you a monthly report at the end of the month, like some folks would like to think. The bookkeeper will look at the daily financial transactions, money coming in and going out. Lots of times the bookkeeper actually writes or prepares the invoices where you're sending out to your customers, maintains ledgers, large paper sheets with lots of numbers and lines on them, or QuickBooks software, which is lots of ledger sheets with lots of numbers and lines on them. And oftentimes the bookkeeper will do your payroll work. However, in today's world, a lot of new entrepreneurs are hiring out contractors to do the payroll work. So the bookkeeper, and I used to say, has a really easy job, with tongue in cheek, because it's not an easy job at all. But if you simplify it down, it's kind of looking at this circle of the accounting or the bookkeeping cycle. All this happens in one day. All this happens the day after you've done some business. So I want you to think about it. And so I used to say to my bookkeepers, all you have to do is start at zero and get back to zero, and your day's work is done. And that's a fact. So I'd like for you to think about putting a zero on your page right here, on your handout page right here, right after where it says transactions. Put a zero right there. and then come over here right before transactions, put a 0 right here. And this cycle going around in this circle as the cursor's going around is all about going around this cycle every day. The bookkeeper will start out with 0, and then on the income side, we'll add in all the money that comes in, and then comes all the way around and tells the owner of the business how much money came in and how much money she put in the bank, what was the deposit that day. And so this will build up with the money that comes in. It'll be go out to the deposit with a deposit number and date, and when you subtract that, you got another 0. So it goes from 0 to 0, showing you how much came in and where that money went on a daily basis. The same thing would apply for your expenses. Start out with 0, talk about all the checks that you wrote, all the money that goes out, where it went, what it was all about. Excuse me, all the way up to around here, the total of money that went out that day, what the bank account was when we started, and show that what the bank account is when you finished, and then the next statement will be how much came in that we just talked about in the previous circle. So it's all about going from 0 to 0 with every transaction. Now your income transactions are based on the invoices that you sent to your customers and their payments that came in, or when they came in and bought something that created an invoice. Your outgoing money is the invoices that people send you, the accounts payable, and those things that you paid is your outgoing money. Money in, money out, cash flow. Positive cash flow, bringing in more than you send out. The negative cash flow, sending out more than you bring in. So the bookkeeper is going to tell you every day what your cash flow was for that particular day. The bookkeeper's job is handled with what we call a chart of accounts. And those chart of accounts are all the line items that you see on a financial statement or on a journal. Each one of those lines has a different number. And each one of those numbers represent a different account. So usually your accounts are numbered depending on whether they're money coming in or money going out or some other item. But usually money coming in are called your 100 series accounts. And so like if you're, let's say that you're selling candy, you would have an account number for chocolate candy, how much money is coming in. 101, 102 might be suckers, 103 might be licorice, and so forth. You'd have a different line with a different number for your different profit centers. Your different profit centers, ways that you make money. Right on down the line, all the different ways you make money, you'd have a different account for it. That is, all the different ways that you want to keep up with. So the bookkeeper will know this. She or he have that chart of accounts. And then money going out, or liabilities, red ink, is usually your 200 numbers. And they will start out with 201, 202, utilities, 203, rent, 210, insurance, 220, whatever your numbers that you apply, fine. And then other items will be numbered at will. No two businesses will have the same numbers, unless maybe it's a chain that has a store in Dunn and a store in Rocky Mount and a store in Winston-Salem, and those individual branches might have the same account number so that they can keep up with them with one bookkeeping system. Excuse me. So, but no two businesses are going to have the exact same account numbers. It's up to you, the entrepreneur, to name your own chart of accounts. Most people leave that up to their bookkeepers and their accountants. So let's get started in just seeing how all this works. We're going to focus on money coming in to begin with, and you keep a record of how money comes in based on the, on the invoices that you send out to your customers, or when someone comes in and buys something from you, the receipt which means invoice. The receipt that you give them is a record of that sale. Every business will do it a little different, but there are some common denominators. One, we want an invoice number, and we want that number to be in numerical order, and the earliest invoice to have a lower number than the latest, and on down the line, you'll just keep adding numbers to your invoices. You also want each invoice to have a date on it, and you want those invoices to be in numerical order as well as chronological order, so that when you need to go back and find a record, an invoice record of what transpired with a certain customer or certain product, you're able to do it a lot easier. Some businesses will use the date as the invoice number. So like today being December 4th, 23, my first invoice today might have been 12/04/2023. And then my next invoice might have been the same number, -2, -3, -4. That way you can keep up with it fairly easy and find it when you start thumbing back through looking or looking at your computer. Notice the sales journal in front of you looks like it's for a hardware store that I found from somewhere. They've got their invoice dates, they've got their invoice numbers numerically listed, and then they break out what the different items are for. Every bookkeeper will do it a little different, but the key is they are trying to define the subject areas, the numbers that the boss, that the owner of the business wants to know and wants to be kept up with. You could just say all sales, or you could just say all expenses and not break it down. But that's not a very good way to run a business, because you're not going to be able to figure out where you're making money and where you're not. So let's say that Kat, who's with us tonight, Kat, let's say that you have got a gift store that you are operating, and you're getting all ready for Christmas, and everything is just looking really good. You've got your promotions out there, and business is starting to come in. And one of the things that you are really promoting hard is the sale of candles. You've ordered in a lot of candles, and now you're promoting them heavy, and customers are starting to come in to buy them. Well, yesterday, a customer came in, and you wrote up the invoice, number 12/12/16. Well, I'd probably guess that was written on December the 12th, 2016. It could be, don't mean it was, if you were using that date to help you do your invoices. But anyway, that's the number that we're going to do. And a bookkeeper is going to take that invoice apart, depending on what Kat, the owner, has asked her to keep up with and to manage and to monitor to see where the money's going and what you're doing with it. So the bookkeeper would be interested in this invoice, and this sale was $8.56, 7% tax for 56 cents, bought the total of the sale less tax at $8.56. Now that 56 cents is not your money. That is state money. You collected it, but it's not yours. It belongs to the state. So usually bookkeepers will take that tax money that comes in and get it out of the picture real quick and over into a pigeonhole so they can keep up with that tax money. When you do your monthly report, you're going to have to go back and see how much tax you collected for the state and for the county and subdivide it and send a report in. That's another bookkeeping function, is doing those sales tax reports. But right now we're going to focus on the stuff other than tax. So $8 came in related to those candles. So the bookkeeper's going to make a note that that box of candles cost $2. The actual invoice that Kat paid for it was $2. The freight coming in was 55 cents. She's got a commission going on that her sales clerks make 10% more, so that's 80 cents. 80 cents of that sale goes to the sales clerk. Excuse me. She's got a customer loyalty plan going on at 5%, so 40% of that sale will go towards the customer loyalty plan. She's also 6.5% targeting advertising campaign on these candles. So 52 cents of that $8 will go towards marketing and advertising. So Kat figures that this box of candles cost her $4.27. $4.27 was her cost. And therefore, that was 53% of the money that she took in. So her gross profit, really margin, not business profit, but gross margin was $3.73, or 47% of the sale. That's pretty good margin, isn't it? Pretty good margin. So we would know right here, Kat would know that by doing this, and this is an important part of planning your business plan, is being able to do this breakdown like this to figure out what your profitability is on each type item you sell. So she would learn right here that she's going to make $3.73 on those candles. But she also is going to learn that she's got to sell a lot of boxes of candles to end up making $1,000 on candles, right? So $1,000 divided by 373. You got to sell 268 boxes of candles to end up with $1,000 margin. And there you go, doing a business model on those candles, letting you know how much volume you need to sell. And if she was planning on making $1,000, that's going to tell her she needed to order in at least 268 boxes of candles to get there. Lots and lots of information can come from your bookkeeping information if you ask the bookkeeper to bring it out for you. So back to our cycle now. The bookkeeper would have taken that same invoice that we were just looking at, and the way the transaction works, she would look at all those different items we just talked about. She would have posted, that is, taken those items and put them in the chart of accounts line item that apply to it. That'd be your posting. Then she would add up all the different little numbers to see if they added up to the big number. That's what bookkeepers do. They take it apart, put it back together, and see if it adds up. And in that work is called doing your trial balance, to come up with a worksheet to show how it worked. We had a little problem. Instead of charging 56-cent tax on that candle, Kat charged 52 cents just by human error, and it happens all the time. So the bookkeeper's going to find out there was a 4-cent error in those invoices, and she has to get it to zero. And so because we took in only 52 cents, we got to pay 56 cents because that would have been the correct amount of tax. Okay, you don't have a choice there. If you make an error collecting too little tax, you got to ante up. All right. So to make sure the records are right, and to say why she changed that number from 56 cents to 52 cents, the bookkeeper would make what's called an adjusting journal entry. That is, she will write down a note, reference that particular invoice, and say, well, I made an adjustment here, and here's why. And then she would end up being able to have a financial statement for the day, which would balance and therefore be able to close the books. Now let me go back to the adjusting journal entry. That is a bookkeeper's get out of jail free card. Get out of jail free card. Because if an auditor comes and asks the bookkeeper, why did you change these numbers? 5 years or 3 years later, after she had done thousands of invoices, there's no way that a bookkeeper could remember unless they made good adjusting journal entries and made a good copy of them and saved them so that she could explain what she was doing. That's important because bookkeepers are always the first person that someone suspects for fraud and people stealing from inside jobs, you know. So bookkeepers have to be really particular to protect their reputation, and the best way to do that is with these adjusting journal entries to protect themselves. So we came all the way around, and let's say on this particular day that Kat took in $2,000. She started up here at the top, she added all these numbers around and came up with the income today was $2,000. Well, right here is where the bookkeeper would say, here is the deposit slip where we deposited $2,000 in the bank, and I'm back to a zero balance here, and everything will stand on its own. So that's basically what bookkeepers do on the income side and the expense side, is take every expense and every income and break it down to where it's supposed to go, what account number gets credit for it, and all these account numbers are called the chart of accounts. Today, as a matter of fact, I just sent an updated copy to my bookkeeper. We added and changed a few account numbers. It's important to protect your company from fraud and from embezzlement. And a few things that I need to mention to you is to separate some duties from the bookkeeper and responsibilities back and forth about who's paying the bills and how's the money being handled. One of the best things that you can do, especially as a new company, is really keep guard on your checks and who's signing and who's writing the checks. One of the safe things you can do is, if you're having a bookkeeper write your checks for you, is let them write the checks, but you reserve it that these checks require 2 signatures. In other words, they can prepare all the checks for you, but they don't go out until you sign them and have an opportunity to inspect them and make sure everything's good. Sometimes companies will reserve on large checks over $500 for some companies, over $5,000 for others. That's up to you to determine. But sometimes people will put a limit on the amount of check that the bookkeeper can sign. And if it's over that, then someone else has to sign it or have 2 or 3 signatures, two signatures, never 3 hardly. Make sure that whoever is taking in checks, either coming in by mail or if you are taking them in at your desk or out collecting, that the very first opportunity you have to have a stamp like this to stamp down on the check that says for deposit only to your company name account. That's really important to hit that back of that check like that, because once it says for deposit only, no one else can cash that check or deposit into someone else's account. So if you have a standing rule that these checks get stamped automatically or very early on, that's a good safety precaution that you'll have for that. Another safety thing you can do is when bank statements come in, is for the owner of the company or your assigned person, but I really would rather you, the owner of the company, open all the mail. You open the mail, especially the bank statements and invoices that are coming in. That is your best opportunity to see if there's any surprises in there, checks that you didn't authorize, signatures that don't look good. Let me see what this is about. And other items that are important to you. So opening that mail lets you see if someone's sending you past due invoices that you thought had been paid, or to look at bank statements that may have checks and signatures in there that don't look just right. If you're not opening your mail, then you don't know this. It's not to say that someone is dishonest, but it is to say, I don't do all I can to help keep people honest. So that's your kind of responsibility to do that, and I highly recommend that you do it. Excuse me. Your QuickBooks now, let's talk about QuickBooks. It can do so much more for you than just giving you printouts at the end of the month for how much taxes you owe. You can ask your QuickBooks to give you pie charts and graphs of the different sales that you're making, comparing last year to this year, or this month to last month, or year to date, what you're doing this year compared to last year to date, to help you gauge just how things are going, to help you see how much money you're spending advertising and weigh that against how successful that advertising is and the amount of sales it's doing compared to last year or the last 5 years, whichever information that you need. So it's really important that you let the QuickBooks do what you can for you. And your bookkeeper needs to know how to produce those charts and graphs for you, because they can be so very helpful as you're managing your sales. Now, payroll is a sticky subject for folks that have a lot of employees. And I want to encourage you, there's two things involved here that's important for the long term. If you're hiring a bookkeeper to do your books and also your payroll, you need to make it really clear to other employees that if they've got a gripe or an edge or something wrong with their check that they're getting, they need to bring it to you or to their manager, not to the bookkeeper. They don't need to bring it to the bookkeeper. You need to know if there's what the employees are getting, and then it's up to you to iron out what the issues are with the bookkeeper before you let the employee put them on the spot or embarrass them or accuse them of doing something wrong or right. These can get complicated, and if you've got a new bookkeeper that's not used to this situation or that situation, you just need to work that out with them in a comfortable, constructive way to make sure that everybody understands. Because a lot of employees will push you to the limit on every hour they work, on every deduction, on every penny, and they will go nag and hassle the bookkeeper, even though she's got it exactly right, where they would not come and nag and hassle you. But you want your employees to be welcome, to know that you got a problem with your check, bring it to me or bring it to your manager, but not to the bookkeeper, because they're working for me, and we'll take up any issues with them. Next thing I want to say about the bookkeeper is, if you've hired a bookkeeper to do the books, then be real careful that you don't also consider that I've hired a bookkeeper, but now that person gets to do all my interviews, they get to do all my welcome to customers coming in, they answer all my phone calls, they go to the bank, they do the deposits, they run errands, they go pick up parts. In other words, they just, Girl Friday or Boy Friday, do everything for me, including keeping my books. If that's the scenario you're getting set up, then you're headed for trouble. Because the trouble is, bookkeepers need to focus on bookkeeping. It's a tough job. And if indeed you're just doing a little bit of business and you've got a lot of extra time for them to work, that's fine. But you want to make sure they have an allotted amount of time each day to work without interruptions to make sure your books are right. And then after they're finished, after they close that loop and close the books, if they've got time to do other jobs for you, fine. But you be careful, because mistakes that bookkeepers make have to be ironed out by the accountants. And the accountants are going to charge you a lot of money to fix mistakes that the bookkeepers made, maybe just because they had too many interruptions. So just word to the wise. Look over their shoulder and make sure you're doing it right from that. So again, I welcome y'all being with us tonight. If you will, sign in on the chat board. Let me know your email address and your hometown. I'd certainly appreciate it. Running a business is a lot like playing chess. The successful chess player is always looking 4 or 5 moves ahead, right? The successful entrepreneur is considering what's happening now, but just as important, what's probably going to be happening tomorrow and next month and next year. And so entrepreneurship is a lot compared to playing chess, and we'll talk about that. First, let's talk about forecasting. We hear forecasting, of course, every day with mainly people talking about the weather. What's the weather going to be doing here and there? And that's so important to us. What do the children need to be dressed to stay out of the rain or the cold, or what clothes do we need to wear for the heat? Forecasting is on our mind all the time in our personal lives. If we're going on vacation, on a cruise, hopefully, we're going to be really interested in how's the weather going to be down in the Bahamas or at Jamaica. Is there a hurricane coming, or should be good weather? So we're all going to be looking into that. So forecasting is an important part of our lives as a whole. If we're in the cattle and beef business, we want to make sure that we have got our dates just right when we bring the mamas and the papas together so that the babies will be born in the springtime, and they'll have a nice spring and summer to graze on green grass and get healthy while they're young. Forecasting is important to folks that are in the firefighting business. My son is a Southeastern Director for National Wildfires for U.S. Fish and Wildlife. Part of his job every morning is to check the weather lightning strikes throughout the Southeast, because if there's a dry spot with low humidity and there's at the same place there's been a lot of lightning strikes, there's probably a forest fire burning somewhere, and it hasn't even yet been detected. So if they see a lot of lightning strikes in a critical area like that, they go ahead and send a team out or helicopters to put out small fires before they turn into big fires. So forecasting is hugely important to them. Now let me share with you something. If forecasting is not a part of your business, if forecasting is not something you're concerned about, then this is the sign that will probably end up in front of your business one day. That's how critical it is. And I don't want the going out of business sign at your store or any other member of our Academy of Friends and Associates here. So let's be serious about what do we need to do about forecasting. Let me just stop for a minute and welcome Ruthie Holloman, who is with us tonight. Thank you for coming on board, Madam Director. It's good to have you with us tonight. I know you got a real busy schedule. Do you have a mic that you might want to say hello to our guest?
Yes, good evening, everyone. Thank you so much for participating in tonight's webinar, negotiating, forecasting, and what was that last one, Mr. Carver?
Forecasting, negotiating, we're doing taxes. Bookkeeping.
Yes, thank you so much, everyone. I appreciate you guys for coming.
All right, well, thank you for being with us, and stay with us as long as you can.
Will do.
All right, let's talk about the things that forecasting can be a very big concern and important concern for you. We want to forecast how many times we will turn products. That is, how many products are we going to sell, because the turns is where we make money. You don't make any money selling things until something is sold, and when you sell it, that's called a turn, and turn is short for turnovers. So if we need to make a certain amount of turns for our business plan to work, that means we need to order in enough product to make those turns so we can do it. And if we order in those, say, 200 products of this or that, we need to know the size, how much space it's going to take up for us to store or to shelve or to display those items. So forecasting is critical for you to determine how much space you need, how you're going to go about it, how many things you need to sell in a month, because that will help you forecast how much advertising and marketing you do to reach your goals. And of course, forecasting is going to tell you, rated on these terms, if you order in a certain amount of product, how are you going to pay for it when it comes? So forecasting cash flow becomes really, really important too. If you're just getting into business and you're going to be selling lots of product and you don't have staff to help you, how much staff are you going to need? How many people are you going to need? What web marketing tools will you be needing? Forecasting the ways to turn these products, to sell these services in advance. Just waiting for things to happen, like floating down the river, is no way to run a business. You need to be thinking about seriously the forecasting issues that it will take to keep the business moving forward, to keep it rolling. Those cash flow predictions are critical. I'll share with you that good times in business will come to you, and it is so great to have a good season of sales. I've been fortunate enough through the years 64 years to have some really boom years when things were just smoking, and getting product in and being able to sell it and move forward. And I can tell you this, that when things are the best, in the back room, things are the worst, because you're trying to figure out where to find the money to pay for all this stuff coming in, before you have a chance to sell it. So forecasting how this cash flow is going to work is absolutely critical for you. And getting some good sound counseling on knowing how the system will work and how your cash will probably play in and play out is critical for you to have a good self-confidence as you move forward and plan your business plan. Knowing that there are risks out here, all kinds of risks and hazards, as in all aspects of life, and each business has a certain amount of risk and hazards as well, and we need to forecast pretty much and think about the major things that we know of that can probably get our business in trouble. And you say, Jerry may say, or Ruthie may say, well, how in the world can I do that, Steve? I hadn't been in business before, so how in the heck do I know what's probably going to be coming my way? Well, I can tell you there's plenty of people that can help you, whatever business that you're in. Folks that are counselors like me that have been involved in lots of types of business and done business with lots of other types of business. Folks like Ruthie, who has all types of resources to help you set up risk management plans. And whatever the category is, I can tell you that we can go to an independent insurance agent. And they can type in on their computer for their insurance company the type of business that you're in and come up with page after page of risk for every type of small business you can dream of. Now, why is that? Because that's what insurance companies do. They insure you against risk. And so that's a great place to get things that you need to be concerned about. And of course, today on the World Wide Web and Google and Safari, information is so available to us. But who can help you best know the risks that will most likely get you in trouble? It's that person that's been there and done that before. So finding a good mentor or an advisor or someone that can point you to one of those is really, really important. I was honored today with one of the directors of the Small Business Center was telling me about one of their clients that was having a particular issue, and she didn't have an idea about maybe where to send them or what to say, and she was kind enough to refer them to me. And when we can connect, I'll be glad to talk to them and see if I can help them. And if I can, I'll know several other people I can recommend to them in their area. That's one of the ways that the small business centers can help you so much. So be aware of that and use those services as you can. So find someone that's been there and done that before you get so set in your ways and in your planning that you can't forecast some more. Because forecasting is important about meeting your customer demands, meeting the marketing and the strategy, and putting it all together in the mix to end up with a better plan. So why do we want to forecast? Why am I spending this time speaking with you guys about this? I'm saying to you that what we want, what we need, is to have the right product with the quality and style and the right sizes. We want it in our hands at the highest possible retail price that the market will stand and our customers will buy it because it's hot. But we want to be able to buy it at the lowest possible price and have all of our risk management tools in place to make sure we've got a chance to make some money. But if we don't sell these products, to be able to liquidate it when the market cools down and not lose money. That's where forecasting comes into play. And you don't want to learn this, my friends, 10 years from now after you made a bunch of forecasting errors. You can start right now and with your business planning to help avoid these type of errors. One of the ways that we avoid a lot of errors is you can't sell something at the best price to be competitive unless you buy it at the lowest price in the market. So to end up buying at the best price, we have to learn, to negotiate our deals as we go and to close them the right way to put us in a position to be ready to sell. How do we do that? So what I want to tell you is in forecasting, the most important forecasting that we can do is being able to forecast a successful negotiation. Let me say that again. One of the most important forecasting skills we can have is to know how to forecast in advance, of course, successful negotiations. And you can do this. A lot of folks look at me kind of cross-eyed or roll their eyes, but I tell you that with practice and understanding, you can learn how to forecast how a negotiation is going to go. But you do it with total preparation. It just doesn't happen. It does it when you've prepared yourself with your target goals, knowing and understanding your pricing and your terms and your concessions. Target goals, knowing your pricing, terms, and what your options are with concessions. So let's get into that a little bit. Moving into a negotiation and you forecasting what's best for you to do it starts with your introductions. You introducing yourself to the people you're negotiating with, to you're selling to, who you're working to deal with. Introductions are important. And that's one reason why I'll come back and say that you really want to do introduction videos. Practice making them yourself. Introducing yourself and talking about your product as if you're talking to that customer ready to buy. And that video needs to go on social media and on your website. It is so important that you are comfortable introducing yourself as a business person and ready and showing your confidence in your ability to negotiate. And if it's a face-to-face, then you want to understand how important that the seating and positioning is that you take so that you position yourself for the best chances that you'll have to be successful in your negotiation. And I'll talk about that in depth later tonight and also tomorrow night on positioning yourself for a good situation. Your documents that you're bringing to your negotiation in advance should have been prepared and actually be a work of art. Be well prepared, whether it's written documents, printed documents, PowerPoints, whatever that you're using as a sales tool, and it's good to bring a tool along instead of just coming empty-handed, is make sure they are really good, that are giving all the information the customer will need, having all the numbers written in that can be written in advance, so that all you have to do when you can close your sale is put that finishing touch on it, or that finishing check mark, or an amount, or draw a circle, and close the deal. That's the work of art, is what I call that in your documents. You want to have a list of frequently asked questions before you go to the interview, before you get right into the negotiating point. Is for you to have already thought through what are the questions that this customer, excuse me, what are the questions that they're probably going to ask me? Because after you've been in business a short while, people are going to ask you the same questions over and over and over again. And if you start making a list of them, and right there under it, write down some really the best answers you can come up with, you're going to look really cool. They're really smart. But the advantage there is you're going to be really well prepared when the negotiation starts coming and going to show that customer that you've done your homework and you come to win a win-win situation for both of you. When you're setting your prices and you're thinking about what range am I going to be able to work with when I'm talking to this customer. Now you see right here, I'm driving home the point that if you are strictly a take it or leave it pricing structure to your customers, there's no room for negotiation. It's take it or leave it. And if it's take it or leave it, I don't tell you that many of your customers are going to leave it and go shop somewhere else. They may come back, but probably only if you're the cheapest. In advance, if you've done your right pricing structure, you've left yourself room to negotiate. You've left some give and take. You've left enough room that the customers can feel like they actually are having something to do with the last price. And when we consider our options on what are the probable offers that they're going to make, and you can forecast this, and the counter offers that you're going to make, you can narrow it down to the point that you'll get real close to exactly what you need in the deal. But you got to think about it in advance. And in some of our webinars and seminars will go into depth to show you each step of this. And I'll be glad to share more information with you if you'd like. So as you're thinking about the offers that are coming and going, the different things, how many offers you think people will make, you want to write those down and have the list of first offer, second offer, third offer, bottom line closing offer. So that as you're doing this talking, you just don't have to try to remember all these numbers, but you've actually got them written down. So when the customer offers you $1,500, you know that you need to counter by saying $1,950 in order to know that that next offer is going to come in there in the $1,600 to $1,700 range, which was your goal. But if you don't have your counter offers already pre-prepared, you're not going to be able to meet your goal. So being able to forecast how a negotiation goes is super important for every business person, because when you can negotiate, when you're buying items to resell, the better the negotiator you are, means the better position you're going to be in to offer better deals to your customers. When you're negotiating, you want to have a good list of your secret weapons. Now, a secret weapon for someone that's negotiating are your value-added features. And value-added features means the things that you bring to the table, the things that you can put in the deal that really enhance the value to the customer without raising the price a lot. Things that you can bring that your competitors probably cannot. And you don't need to list all these out in front for the customers to see. You need to hold back your secret weapons as negotiating tools so that when you're talking to the folks, you can use them to help you close the deal. So that might be that you're going to have a better delivery deal. That might mean that you're not going to require a deposit. That might mean that your tax situation is better than competitors. It might mean that you're offering a product with more warranty. It might mean that you have more color options. It might mean that you're able to provide better parts or service to it. Lots and lots of considerations depending on the different types of product or service you're offering. But you have to think about this in advance, so when the time comes to close the deal, you're going to be able to use these value-added items as closing factors. Another really important way to forecast a successful negotiation is your ability and planned. Your secret weapon is to be able to capture the moment. In every closing deal, in every negotiation going back and forth, if you're able to capture the moment, to bring a little drama, for you to be dramatic, to have a little surprise, to steal a few seconds, in other words, for you to come across as a professional salesperson. Don't have to mean that you really have a lot of experience, but you have the techniques to understand the importance of being able to close the moment, to bring their focus in on what you're saying to help you close the deal. When you're able to bring their focus in to listening to you with your hand gestures and the way your eye contact and such as that, how you're handling your voice, then you're going to be in a position to grab their attention long enough to move forward to close the deal. You'll need to be watching out now for different signals that they give you, different closing signs, and we'll talk about those tomorrow night in depth. But in forecasting the negotiation has a lot to do with you know when to stop selling and start closing. You know when to stop selling and start closing. We all have been in the situations when people just talk too much. They didn't know when to hush. I might have bought from them 30 minutes ago, but now they've talked me out of the deal. So important that we learn how to listen to our customers. A slight eye movement, long silence, turn the volume down. You sense that it's time to start selling. It's up to you. It's up to you to motivate that customer. Let's get this deal closed. No one else can do it but you. So that's why it's so important that you learn these skills and go for it. Now, when you're going out to negotiate, when you're going out to buy something, an expensive something, one of your first rules is always to know, it's called the BATNA, best alternative to a negotiated agreement, is to know where you can buy something at a good price that suits your needs at a reasonable price. In other words, after you have done your initial surveying of the market, you found a place that you can buy what you think is a good deal that serves your needs at a price. Then it's time to go out and start shopping. That preliminary work you did was just getting ready to negotiate. So let's say that you want to go out and buy a new office furniture set that's going to cost you $2,500. And you shop the internet or some local stores or whatever, and you think you found something of good quality, available to purchase. You know what it's going to cost you, $2,500 if you buy it there. You know what the delivery issues, the tax issues, and such as that. Now it's time for you to start shopping. And when you go out and start shopping, you're going to be looking for that same product at a price well below $2,500. So that when you're making offers to people, you may be offering in the $1,500 range or the $600 range or whatever. Because listen, my friends, you don't ever know what the pricing structure was of someone that's selling you something. An item that may be priced at $2,500, the seller may need $24.99 for it to break even. That is very seldom the situation, but sometimes it is. But that same item that's being offered for $2,500, another seller may be able to sell it to you for $2,000 and still make $1,000 on it. Every different type of item that you buy has a different pricing structure in the world. For example, you'll notice starting this past week that jewelry stores really started advertising because now is their season. 80% of jewelry store sales will be done between now and Christmas. And they're going to be offering deals like 65% off and 50% off and 80% off to get people to come on in and make those deals. Well, what happened last month when that sale wasn't on and you wanted to buy that thing? If you just went in and paid their price, you may have paid 80% more than you could have bought it from if you negotiated. That's why it's important to know your market and know where you're at, to know to go now and start shopping. Every professional business, you included when you're up and running, hopefully will have a pricing structure that gives you plenty of room to negotiate. And depending on how much pressure you're under, how lucky you were when you set the price, how lucky you were when you bought it, how skilled you were when you negotiated, it is amazing the range that you will find in buying products after you shop. So that $2,500 office set that you went to, let's say you go to the next place, they got exactly the same thing and they've got it priced for $2,500 right away. And so you'll just say your first offer to them is after you look at it, and I'll say, well, let's see if we can buy this up right here now for $1,850. If you do, and you start negotiating from there, and maybe even work your way up to $2,000, or maybe you started at $1,200 and work your way up to $1,500, never be ashamed to offer a very low offer. A business person is looking forward to getting that first offer from you, as you need to be for your customers, because that's when the negotiating starts. It starts when you make that first offer, okay? So how do you keep the negotiating going on? You want to learn the skills of yes, if, no, but marketing. That is to say, if you're just saying take it or leave it, there's nothing to talk about. But if indeed the customer makes you an offer and you say to them, well, Ruthie, I really appreciate that $500 offer. I love to get offers in, but I wanted $600 for it, and that was a low dollar price. But yes, I'll take your $500 offer if I don't have to put those new tires on that truck you're talking about buying. Or, Ruthie, thank you for your offer, $500. I really need the $600 for it. And no, I can't take the $500, but I will take that $500 offer if we can leave off those new seat covers. The key words were yes, if, and no, but. That is the comeback that you're going to say to your customer to keep the conversation alive. If you just say no, it's over. But you say, yes, I can do this if, or no, I can't do that, but if you can do this, it keeps the conversation alive. And keeping it alive oftentimes end up with a win-win deal for both parties. Because oftentimes it's not about that low dollar price that you agreed on, it's about other factors that come in. Now, when you're negotiating, you want to remember there are several things that are super important. And I see our clock now is at 8:04. I'm probably going to go another 30 minutes here, so y'all are welcome to stay with me, but if you made other plans that have to go, I will understand that. But I got some points here that I think you'll really enjoy. The first thing in negotiation is never give up anything unless you get something in return. Never give up anything unless you get something in return. Make the customer make you the first offer. You set your price up high enough that you know that first offer you'll be safe. Negotiating can't start until you get an offer. One of the best and smartest things you can do is say, is this your best price? Right up front, just say, is this your best price? Because that negotiating tactic, we call it poor-mouthing tactic, is saying to the other side, surely you've got room to give me a better deal. And oftentimes they will. And when you can just use a few words to get a better deal, you're being smart. That's what you want to do. Keep the process going. As long as you think there's hope that you can make a deal, you keep the process going. Keep talking. Keep making yes, if, no, but offers. Find a way to close that deal if you can. But here I need to say something important as well. As a small business person, if you get a bad feeling in your gut about this person you're talking to, that they're lying to you or misrepresenting something, sometimes it's better for you to walk away than it is to do the deal, and do it politely. But oftentimes your gut feelings are going to be right. As long as you've got a little bit of experience and have an idea of what's going on, you don't have to take every deal. Because if you take all the business, that means you're going to get all the bad business as well. And it don't take but a little bit of bad business to wipe away the margins of a whole lot of good business. So I'll put that in there. You're not obligated to take every deal that comes your way. Sometimes you're better to walk away. So knowing your product and knowing what your risks are, super, super important. So there's 21 negotiating tactics employees. They are in your handouts, and you certainly want to do those. But the 9 most popular ones that people use, I'll take a few minutes to talk about those, then we'll close it out. But please study your handouts. The 9 most used negotiating ploys and tactics. 1, burst the bubble. That's something kind of new in the market today, especially in real estate. And that's when someone will call you and say, Steve, I see that you're advertising this item for $125,000, and I have a client that's really interested in it, and they want to make you an offer, but it's not going to be anywhere close to that, and they just don't want to waste their time. Should I tell them to make the offer or not? What they're doing is setting you up for a lowball offer. And it's nowadays people will call you and set you up for it and ask you, would you consider it? Some people will just say to see and take it or leave it. No, don't waste my time on a lowball offer. That's wrong. What the right answer is, yes, indeed. You tell them to send that offer on in here. I'll be glad to consider it. Remember, if you price your stuff up high enough that you can negotiate, you've got room to do some offering. And you never know how that may play out. So always encourage people to make the offer. Flinching, number 2. Flinching is like the old Fred Sanford deal on the old TV show. Fred would say, oh my God, that gives me a heart attack, that offer is so low. I'll go out of business if I do that. Flinching is showing a physical reaction to an offer someone's made to you. And when you do that, lots of times someone will say, oh, okay, I can do a little better. It's amazing sometimes that'll buy you a really good discount. Other things is especially real powerful for ladies is when you're negotiating and someone makes you an offer and you want to see if you can do a little better. Just don't say anything. Just look at them. Look around. Show a little bit of disgust on your face, like shake your head, squeeze your hands, put your hands up here like it's giving you a headache. Don't say anything. Just look at them. And don't say anything until they speak. Because lots of times what they will say is, well, what do you think? Can I improve that to get your attention a little better? Your silence can be the most important weapon you have sometimes negotiating, especially with an inexperienced negotiator. And in this world of pending price increases, inflationary times, using the motivating tactic, you need to go ahead and let's buy this now because you know prices are going up every day. And buying it now, you can buy it at a lower price. That's a very powerful negotiating tool right now. The red herring is when someone's selling you something and talking about all the good things about the product, but never mention the bad thing. Never talk about the things that they're weak on. It's always talking about their strong points. So that's why it's important. You can't expect the salesman to tell you things that's going to talk you out of a deal. Just know that. And it's up to you to do your homework and inspect what you're looking at to make sure that someone don't send you a red herring deal and left out all the things you need to be concerned about. Some folks will come in with 2 or 3 at a time, or sometimes just 1 at a time, and want to do a deal with you. And you need to know that folks will plan at right when you're ready to close that deal after you worked real hard for them to say, man, I appreciate this good offer, but you know, I don't have the authority to make this deal. I need to go back and talk to my daddy. I need to go back and talk to my wife or talk to my partners before I can answer you yes or no. Well, that was a plan. Folks that do that do it very effectively. So you want to know going in whether this person has the authority to make the deal. And what you do is you say, all right, now look here, I came today to do a deal. I got my trading breeches on, so if I can give you the number that meets your needs, can we sign the deal and do it right now? And when you tell the customer that, most of the times they will be honest with you that yes, I've got my checkbook with me, or no, I don't have to talk with someone else. Well, when they give you that information, then you always want to hold back one of your offers. You want to hold back your last counter offer because the chances are excellent, maybe 85 to 90%, that when they do come back, and they usually will, they're going to come back and say, well, my partner said, let's see if we can do it at this price, which was a little lower than we had talked about. So you need to leave a little bit of margin so that when they come back, you can close the deal with them. Excuse me. Splitting the difference is when the 2 people have got to kind of an impasse, and you want to say, well, let's meet in the middle. Let's find common ground, split the difference. A very effective way of doing business. And sometimes, from the sales standpoint, the more experience you have, you'll learn how to take that and really manipulate it into making actually more money than just splitting the difference. One of the most and powerful things you can do is have your money or your checkbook with you when you're ready to buy, or that you have the money in the bank that you can say, I'm ready to write a check right now. I can write it to you, or I can write it to someone else. But here's my offer. And that will turn heads. That'll make a lot of difference for you. The most used negotiating ploy that will rob profits from you is called nibbling. And I want you to use both sides of this. I want you to stop people from nibbling on you, and I want you to learn how to nibble on other folks. Nibbling is when you write down ready to close the deal, and you have come up with a number, and then you start saying, or your customer will say to you, now, Steve, you did say I'm going to get that free subscription with this car, right? Or that does include these free oil changes. It does include the extra warranty. It does include this, and this, and this went on and on and on. And all that stuff had been talked about, but it wasn't part of the final deal. So how do you stop that? You negotiate your deal, and remember that I said have your paperwork like an art form. You write down what the deal is, the magic number that y'all have agreed on, circle it around it, and have them initially, and you initially say, okay, here we are, I'll get the paperwork all ready, and we'll finish it. And then when they start nibbling, then you go back to yes, if, no, but, and say, well, yes, that wasn't a part of our final arrangement here as we negotiated, but I can do that if you'll cover my cost here at X amount of dollars, or no, I'm sorry, it didn't include that free subscription, but if you want it, I can include it in there for $300 more. In other words, you're not giving up something for nothing. So I hope you've enjoyed this presentation. Please look at your handouts and your study guides. We'll touch on some of these items even more tomorrow night when we talk about deal closing and tactics that you can use to help you close the deal, things that you've never even considered, I bet. And I'll look forward to working with you. So let me say thank you for joining us tonight, and God bless you and your family. And if you'd like to make any comments, we'll just open up the mic or ask any questions, and we'll try to address it. So thank you very much.
Hi, everybody. Sorry I'm late.
Hey, LaToya, how are you tonight?
I'm doing pretty good. I had a little tough time getting on, but I'm here.
Good. Was it the network was not cooperating?
I think so.
Yeah, we're missing about 5 or 6 people, so I won't be, maybe even as many as 7 that I plan to be here. So I'm glad you were able to make it.
Yeah, me too. I enjoyed the presentation so far.
All right. Well, thank you so much.
Thank you.
Now, listen, tomorrow night is mandatory, so make sure you join us tomorrow night, okay?
I will.
All right. Well, good night.
Good night.
Okay. Jerry, thank you for joining us. Have you been with us before?
No, this is my first time.
Well, thank you for joining us. Where are you located?
I'm in Winston-Salem.
Well, that's a good thing. And what type of business are you into?
I'm real estate manager.
Good for you.
Whatever term you want to use these days.
Well, thanks for joining us. And tomorrow night's presentation, I hope, would be helpful for you as well. And I hope you have a good evening. Do you have any questions?
No, what is your, I have 2 things for tomorrow, actually 3. What is your class for tomorrow?
Our time is 6:30 to 8:30 tomorrow night.
That one.
Mm-hmm. It's on basic taxes and also record keeping, depreciation, and secrets to closing sales.
Okay, so I should go on.
I'm looking for the link right now so I could put it in the chat. If you could just give me just a moment, I can find that for you.
Okay.
That'd be great.
Appreciate that.
Kat, do you have any questions?
No, I was during the whole time you were talking, I was transferring it for what I needed. So I still got some good information out of that.
Good. Well, we'll send you lots of emails with more information for you in future classes that we're having.
Okay, great.
All right. Well, good night. God bless you. I hope things go well.
Good night. Thank you.
All right. Okay, Kat, you got anything to close us out with?
I don't have anything. I just learned a lot tonight.
Very good. Well, thank you. I hope y'all rest well. See you tomorrow night. Ruthie, you want to close us out?
Absolutely. Thank you so much, Steve. I did include the link for tomorrow night in the chat. If it doesn't come up right away, select the drop-down box and for Nash Community College instead of Alamance, because sometimes Alamance automatically pops up.
Right.
But I want to thank everyone for attending tonight's webinar. We want to thank Mr. Steve Carver for always being so supportive of Small Business Center, and thank you all participants. You should receive a survey in your emails in the next coming days about how well Mr. Carver did. Please, we want to hear back from you, so complete that survey as soon as you can. Thank you all, and good night.
All right, good night, Ruthie. Thank you so much. We're missing about 6 people. I'm thinking our network was having some problems. Latoya said it took her a long time to get in, so maybe that'll be repaired tomorrow night.
It took me some time as well, so that could have been the issue. I did have to try twice, but I was able to get in.
All right, thanks so much. We'll see y'all tomorrow night, and take care.
Thank you.